The latest jobs report out today is adding to those concerns. It shows that the U.S. economy has added an average of 164,000 jobs a month this year. That is down from an average gain of 223,000 for all of 2018. This is set against a backdrop of trade wars and possibly more tariffs next week. David Wessel of the Hutchins Center on Fiscal and Monetary Policy at the Brookings Institution is back with us. He's also a contributing correspondent for the Wall Street Journal. David Wessel, it's great to have you back with us.
Good to be with you, Judy.
So last month we were talking about 224,000 jobs have been created in April. Now we're looking at 75,000 in May. What happened?
Well, the numbers bounce around quite a bit from month to month, but as you pointed out, on average, we're creating fewer jobs now than we did just a few months ago. The economy is slowing down. It's still strong, unemployment at a 50-year low. Manufacturing has been weak. I think if we could see 150,000 jobs a month, which is what we've averaged over the last 3 months, and a 50-year low on the unemployment rate at 3.6%, we'd be very happy. The problem is, and the worry is, that as you look over the horizon, things look like they're deteriorating, in part because of the fright that President Trump has created with these tariffs he's threatening to impose on Mexico and the ones he's already imposed on China.
How much of a drag is that presenting? Because yes, there are tariffs that have already been imposed on China. We don't even have the tariffs imposed yet on Mexico. Why is that a drag?
Well, I think that it's clearly concentrated pain on some people. If you're a farmer and you've been hit by the Chinese retaliatory tariffs, or if you're a bicycle maker and you've been trying to import parts from China, you've felt the pain. But the overall U.S. economy has been strong enough so far to shake that off. I mean, after all, unemployment is still low, and most of the stuff we make in the U.S., we consume in the U.S., and most of the stuff we consume in the U.S., we make here. But I think that the fear is that it's going to get worse from here. The tariffs that the president is threatening to impose on Mexico, the ones that are down the road on China, are things that would really raise prices to consumers and would have a direct impact on American households.
But do I understand you to say that's part of what's going on, but there still are other signs of slowdown?
Yes, absolutely. I think the thing that's concerning now is that if you start to see some wavering in the pace of hiring, if you start to see businesses being reluctant to make new investments, then that could become a self-fulfilling prophecy. And that's what the markets seem to be saying, particularly the bond market. They're looking over the horizon. They say businesses are going to be so shaken up that they're going to start pulling back.
So meanwhile, you have the Federal Reserve under Jerome Powell, the chairman, saying, well, we're looking at the economy, and if we think things are going to get weak, we're going to be here. We're going to cut interest rates.
Right.
Does that look like seriously something that's going to happen now?
Well, the markets are pretty much assuming that Jay Powell and his colleagues at the Fed are going to cut interest rates. I think they're in quite a difficult position. On one hand, it must be tempting for Jay Powell to get up in front of a microphone and say, you know, we did a good job. President Trump is screwing everything up. We're not going to bail him out. And I don't think he will, but that must be tempting. What seems to be the thinking at the Fed is our job is to keep the economy going strong no matter what the politicians throw at us. It might be tax cuts, it might be tax increases, it might be tariffs. And so I think that they're anticipating that Trump will cause a slowdown in the economy and they're going to rescue us. But the thing that makes it very difficult, two things that make it difficult. One is they don't want to look like they're caving to President Trump, and his frequent demands that they cut interest rates raise their hackles. And secondly, I think they want to avoid being in a position where they cut interest rates in anticipation of tariffs. Then the president turns around and says, oh, never mind, I'll shake hands with Xi Jinping in Japan when he meets him at the end of the month.
So what does that say in terms of when a decision to cut interest rates might come?
Well, the Fed meets in a couple weeks here in Washington. I don't think they'll cut interest rates then. The financial markets are betting that when they meet again in July, they will cut rates. I think that's the soonest it will come.
And we should point out, David Wessel, that today the president was tweeting, it looks like, you know, we may have a deal with Mexico. And it's just unclear.
Right, and it's certainly in his control. He created this dispute with the Mexicans. Things were on track to put through the new trade deal with Mexico and Canada. He kind of surprised everybody by this tariff threat with Mexico. So I think if the tariffs start to go in next week, I think people will think this might be more than presidential tweet or presidential words. It will have real damage. You know, China and Mexico are by far our biggest trading partners. There are lots of companies that depend on supply chains that run through those companies. There's lots of things that we buy, and it's not just avocados that come from Mexico.
People are going to be watching this very closely over the weekend.
They will.
David Wessel, we thank you.
You're welcome.